The following interview was recorded for PrivateEquity.com radio and the Certified Private Equity Professional CPEP Certificate Program. For more great interviews and other private equity resources, visit PrivateEquity.com.
Today we have with us Metin Piskinoglu, Managing Partner of MP Financial Consulting. Metin is based in Turkey and has worked with private equity firms and investment houses through his boutique consulting firm, and in his previous experiences as CFO on the execution side of M&A business. In addition to his work consulting with mid to large-sized companies, Metin finds time to blog for the Turkish Harvard Business Review on the web. And I just want to thank you so much for taking the time out here today. I know it's a little later out there in Turkey, so welcome. Metin.
You're welcome. Thank you.
Yeah, thanks for joining us. Okay.
Certainly.
I gave a little bit of a bio to begin there, but I was wondering if you could please briefly describe your position now and how you're connected to private equity and how you work with private equity firms in your business.
Okay, thank you for the opportunity, first of all.
Absolutely.
And I'm currently managing partner of my own MP Financial Consulting company. And MP Financial Consulting actually tries to reflect own build-up experience with financial reorganizations and restructuring services, providing to small and medium-sized companies to become actually the 21st century company, you know. So it's some passing through. And also the most important part, I believe, is the corporate governance issue with the Turkish companies. So it's mainly as you can imagine, it's a family-run business environment. So, and also I had talked about that I have worked more than 20 years with different companies, including Unilever and Citibank. And I have a strong experiences in this on later stages, restructuring FMCG company after private equity funds capital injection to this company. And I prepared the real estate investment companies for IPO. We have prepared offering circle and with international brand lawyer houses and also I worked on another deal, which was we made the company ready for the merge with the national and international companies. Agricultural, it was in the agricultural sector, and it was planning like a $500 million investment in 5 years.
Okay.
And also, you know, being those international FMCG banking sectors and being part of the own businesses allowed me to say, hey, okay, it's time to be in the consultancy part of the business, especially the private funds. And I can tell you that the working conditions with PE is very important, you know, so you have to know the PE structure, environment, expectations of people, you know, and I also have a regional business network, very good friends, including auditor, lawyers, other PE workers, and my financial background and through and also the strategical paths to follow up and knowing only not deal itself but also executions. And I'm determined to manage the working conditions, including, and of course these are all different in every culture, as you can imagine, and Turkish culture is also different. As you can imagine, the California and Oregon are different.
Yeah,
I can imagine that one. So you need to understand the relations nature, and I'm currently working with the locally established PE funds and getting in touch with the global investment houses, and so I can provide consultancy services with these investment funds.
Okay. Well, great. Yeah, thank you for providing all that background. And if we could take it back a little farther, you know, I've spoken with you before, and I know that we have this Oregon connection. So I wondered if you could give a little bit of background onto how you ended up in finance and private equity, and how you ended up, you know, coming to the United States and going back to Turkey, and just a little bit of your background there.
Certainly. First, I was actually in Scappoose, Oregon.
Okay.
It's about 20 minutes away from Portland. So I was an AFS exchange student. I went to school as a senior for a year. Sure. So I had a wonderful family, and I still have a connection with them, and I talk to them, and even my kids talk to them. So it's just beautiful. And later on, I went to university in Turkey. So I said, the education wasn't good enough for me at that time. So I said I should have the master's degree, and I checked out, and I had a chance to have the degree from Portland State University. I attended lessons, and I have my degree on Master of Science degree on Economics Applied from Portland State University back in 1990, and I came to Oregon, I believe, twice in past all those years.
Great.
And later on, I started work with the banks. And I had very good education in Turkey, and I attended the course called Center for International Banking Studies, prepared by the Citibank at that time. I had my financial education actually there, so I was more econometrician, and I attended Unilever, and I had other companies. I worked for the Citibank, and then I later on. So I was always in the operational side of the business as a finance executive, and always execution. And I read a lot, by the way, I should say.
Sure.
And
we spoke a little bit about that.
yeah, and I've been in M&A deals, different types, and including real estate funds, IPOs, and mostly as I said just before, I undertook the CFO responsibility at a company that had a PE partnership. It was just built up, so both sides agreed me to start as a CFO, which was a good experience, I believe, and there wasn't any reporting base or anything, but after that time, after we have done the work, and the company was having regular reports, and also the regular BOD meetings or management meetings, whatever available every month on regular basis. So, and currently to leverage my strong finance-based operational experience, and I even worked as a planning manager, production planning manager in Unilever. So, so I have a lot of operational experience. I started to provide financial consultancy services and act as a intermediary for direct investments in Turkey to the mostly SMEs. That's what I am targeting, small and medium-sized enterprises.
Sure. Okay, well, yeah, it's funny with that Portland connection for the audience. I'm actually recording this from Portland, Oregon, so bringing it full circle.
Proud
yeah. So, building on that, how would you compare private equity industry in Europe and Middle East to, or specifically Turkey, to America's private equity? Are there big differences? It's nice that we get an international perspective on this. Especially given your background in being in America and knowing that area.
Okay, thank you. First of all, of course, the size matters, as you can imagine. Sure. State size and is too big, of course. Turkey is just started. It is called the emerging market. So we had in past, like 2010, we had 26.4 declared M&A size, and 2011 was 11.5 billion, and 2012 completed with 23.2%, 2 billion US dollars, and overall transactions 42% declared, and these were totaling 131. And sectors were mainly energy, finance, food, FMCG, transportation, health, and 50% of those all bought by the foreigners. And Turkey receives PE investments past 10 years, and also successful exits performed. There will be quite increasing PE investments in coming years. That's why we expect. The reason of that, and the fundamentals are good, means that good population growth, very young population, and income levels are increasing, economic parameters are in line with the plans, and inflation went down to the 6 to 7%. And I should remind you that we used to have back in 1990s, inflation was about 60, 70, 80%. So the economy is in control, and companies has a great opportunity as exporters due to the advantage of the location and the growing domestic market. and they certainly need capital increases. That's the one thing sure, and they need financing alternatives to banks, and companies were shy to use outside sources at the old days, and they used own sources or go bank to finance their growth. But they have witnessed that growth of companies with PE funds, and they start to see it beginning of 2000s, and so they start to use to it, and they don't see it as only the capital source, but also the regulating the company. As I said, this is mostly the family-owned businesses, and they see that that's the source, and there's a capital to grow there, and also, I should remind you that Turkish banking sector is under strong regulation by the Banking Audit and Regulation Association, which is acting based on the Basel rules. That's a good reminder, I believe. And
Basel?
Basel, yes.
Okay, yeah, sure. The
also,
European laws.
Yes, and last decade Turkey brought serious PE investments in different sectors, but certainly there is still large room for growth in Turkey. And still, of course, when you compare it to US and Europe, it is still at infancy stage compared to these developed markets. So we got a long way to go. And you can reach all the economical variables, and GDP, for example, for Turkey is about $786 billion in 2012, and it was only $231 billion back in 2002. You can see the jump in the economy, and the GDP growth rate is about 5%, which is, I believe, very good. And especially if you see the economical issues lately in the Europe. I mean, overall,
I think a lot of countries would be happy with 5% growth.
Yeah, they are very good. They take it down sometimes to 4 or sometimes a little bit more, but it plays around 4-5% in the country. So, which is a lot of good promises for the PE companies. And 16th, for example, I'm just talking some numbers here too, but 16th largest economy in the world, and in Europe it's 6th largest economy, and dynamic and mature private sector in Turkey, and they have about $153 billion worth of exports, which is good, and they are targeting about $500 billion export in 2023. So it is increasing. Population is about 76 million, and very big youth population, especially compared to Europe. And healthy population is about under age of 30. And these are mostly educated people, and there are a lot of, I should say that a lot of young Turks educated in the States, as myself. I'm old compared to them, but there are a lot of kids still going to the school in the States, and they are graduate of the good schools, I should say, Ivy League schools, and they are active in Turkey. So there's no problem on finding the right people in Turkey. And also the government did a lot of technological infrastructural investment and transportation, telecommunication, and energy, and it still goes on. And sea transport is very easy. As you can imagine, the Mediterranean Sea and the Aegean Sea, we are in the major, just aside with the Europe and also aside with the Middle East. So, as I said, the FMCG, tourism, construction, health, hospital, energy, education. And there are a lot of more figures that we can talk about. Also, the Istanbul Stock Exchange, which is called Istanbul Bors, is active, and it's, I think it's matured, and so a lot of, again, the foreign investments taking place.
Well, yeah,
that's about
really
that. I
should
go more. Yeah, you can find more statistical data everywhere. For example, you can go and Goldman Sachs, Merrill Lynch, and JP Morgan all around, and they have all the reports on Turkey too. So it is a well-known market by the financial people, I should say, and companies.
Yeah, no, I think that it definitely has a reputation as being a hub, especially in that region. And it seems like there's a lot of positive indicators, signaling that there might be a continued future growth and opportunities for private equity. And I guess that leads into my next question, which is you sort of covered on infrastructure and education in some of those areas, But where do you see the biggest opportunities for private equity funds or other investors in Turkey? You can go, is this sector specific, or if there's a type of investing, a stage, or anything like that?
I think still the areas that I talked earlier are still investment areas. Like, of course, it's depend upon the size of the investment that you're going to make. But the construction and energy are very good areas to enter. FMCG, tourism, and more than 23 million people visit Turkey every year, and we have good regions for that, and Mediterranean and Aegean coast are outstanding places to visit.
My brother was just there, so he's one of those people.
Yeah, certainly. And Istanbul itself, of course, and even Dan Brown's latest book was here. Last part of Dan Brown's book was about Istanbul. So I hope it's not advertising. And and also tourism and education is another issue because of the young population, and consumer-related industries, retail. And healthcare is another issue. It's pulling a lot of customers from Middle East lately, the healthcare. And even from the Europe, people come down here for the surgery and all those things. It is still cheap compared to the Europe, including even the hospitals and, staying in Turkey and even the flight itself. And a lot of opportunities ahead, and it is what important is PE is the way it gets close to the business, what kind of businesses it wants to be. And SMEs and large corporations, of course, have a lot of opportunities, significant opportunities and capacities they have. And as you said just before, infrastructure are here, and due diligence companies here, big four accounting companies in Turkey active for a long time, and major corporate investment specialized lawyer offices, and also the human resources we talked about. And before all, government supports foreign direct investments. That's the most important part of all, and government doesn't not usually, wrong word, but the government does not make any sectoral differentiation. That's the important. If you allow me, I will just tell one small sample case.
Yeah, absolutely.
Yeah. For example, there's a made distiller. It used to be owned by the government, and it produces actually mainly the raki, which is the national drink of the country, and Turkish raki, and all kind of liquor producers. And this was sold by the government to the local private company back in 2003 for $292 million. Wow. At 2006, Texas Pacific Group bought that company from that local private company for $810 million. Wow. Which is a good deal. And 2011, Texas Pacific Group sold it to the Diego company, big, the producer in the world, and for $2.1 billion, and it was sold with 10 times of 2010 EBITDA of a company to Diego, which is very good. And in a volatile M&A environment, PE firms constantly prove to be opportunistic investors always, and using readily available financing to acquire businesses, refinance portfolio companies, and they can contribute a lot. And they have to capitalize on high growth markets, which is Turkey, I believe, and areas for product offerings, different products, and fundamental operation. If you make if you make fundamental operational improvements, you can see that right away. This is very good for the PE too, and you have to back it with the right management team, and you can affect sustainable value creation, in the company very fast. And they can find these type of samples in internet easily.
Yeah. No, I think we hear stories about that fairly frequently here. The high growth potential in Turkey, and as well as just in some of these companies, like you said, making those fundamental improvements. Yes. And obviously increase the value drastically. So that's great to hear. So the next topic I wanted to cover is you have experience working with private equity restructurings. Can you give our audience some insights into how a private equity-led restructuring typically goes, like how that would proceed?
The first overall, I mean, my experience says that, I should say, the PEs have to have good finance consultants, lawyers, and tax consultants on every stage, before, during, and exit, and all the process, through the whole process. So they have to recheck that and re-engineering the business. You can do it through reorganizations, redesigns of the business structure, first of all. And you have to check out the tight cost control. You have to put down tight cost controls and management, hiring qualified people to achieve the performance goals, you have to, and creating alignment of interest through the performance-based compensation system among them. And, being able to find the low-cost working capital, which is, I think, one of the PE's areas, and they can find the very good capital financing from financial institutions that they are in. And at the end, the whole world is global now. It's a small world. And I'm just going to mention, but corporate governance system and the practice in invested portfolio companies is the most important issue. Okay. And if you go on that one, I think they have to know the business environment and describe possible risk areas, including possible problems on the way, what can happen, as Americans saying that they expect the unexpected,
Yeah, exactly.
So you have to think about it and make sure agreed plan is on the run, targets reached in framework, because I always, for example, when I was a CFO, I always look out to our contract and what was our way. So we always put the targets on the reports that we prepared. So we are where we are and on what stage we are, what we are doing, and plus that famous first 100 days, what needs to be done and how should we go on. And the agreed plan should be on the run, and targets reached in this framework must be reached. And if necessary, changes on the plan must be made collaboratively, and if it's necessary, because the market changes, competitive environment changes, you have to establish reporting system and regular BOD meetings every probably two months or 3 months latest should be performed. At meantime, every month, the management meetings are essential, probably PE people and people from PE and executives from the company should get together, or through the phones as we are doing at this moment, it can be done, and looking up to the reports on a regular basis. And if depending upon the size and how the business go, you have to change CXOs, which one is ever necessary, CEO, CFO, CMO, need to be rehired, maybe at the first step or step by step, you can change some of them. And management is important. That's what I think. Sure.
No, I think, you talked a little bit about the first 100 days, and I was wondering if you could take us through, you're going in and you're turning around or restructuring a company, say you're, the CFO or the executive in charge of that. What are the first steps you take? You talked about having the right people in place, and I wonder if there's a first few steps you take when you're looking at a company and you're evaluating the opportunity.
Certainly. First I understand the company. I try to understand the company very well. What are the connections in the company and how the people behave. It's more behavioral economic science, and the competition environment of the company. Which sector are you in, and how is the competition? There are for example, small markets, and most of the international players are in the country. So you need to understand the economy, what's happening when, and if there's a seasonality in the company, you have to look after that one. And if sometimes there is unwritten rules applied in the market, I will look after those, and so make sure that when I am taking a decision, I am taking under certain constraints. What are those subject to? And I would first state, you have to recognize the strengths and weaknesses of the company. When we can reply, and what we are doing, which are the wrong ones, and profit areas of the company, and prioritize for effective strategy implementation. all things. We have to have the strategy, and how we're going to implement it. And you have to have, first of all, very good due diligence on financials, operations, and tax, and also the strategy. And you should have gained a clear picture of it, and need to have a strategy that's built up right, and the path to follow should be right. And I would also talk not only the CFOs, CXOs, but also the managers one below. Make sure managers also understand the targets. It has stated that company is not boss run or family business, and partnership established. So it's been run by both of them, and together with the department directors and managers, and both all together, and areas need to be left. And I would also ask if there are any business areas need to be left because it's not contributing to the company, and any innovation opportunity. And these persons are sure know the business, and they know the risk areas of the companies, and they probably have the clear ideas that they were never able to tell, and how to run the company and move the company forward, and what is stopping them. That's the most important part. What was stopping them? And it would be essential to have clear visibility on sales, finance, marketing, and product, and IT, back office, purchasing, supply chain, all the areas you need to touch as actually CFO. And I have touched on all those issues back in days, and also the FMCG being the part of the Unilever culture. It's just allows me to say the FMCG touches all the area. And you have to governance, right BOD, you have to assign the right BOD members, okay? And especially the experienced independent members are important. And right reports, timing, performance criteria, another specialty. Performance criteria, steps to monitor the performance is in continuous base you have to. And of course, control systems, actions versus plan, and audits are the important part. And continuous regular meetings, as I said, with the executives, spending time with one below of the directors, as I said. All these are especially important, and you have to need to go back to the contract and what was said and how it's done. So these are the most important part, I believe.
I think that's a great summary. I think one important point you touched on is that the people within the company, the management within the company, often has ideas that they haven't been able to take action on, or if there's
certainly
fiscal constraints, or they just haven't been able to take that step back and look at the company and what they would do differently if they had the opportunity. And private equity often presents that opportunity. So I think that's a really good point.
Certainly.
So we've talked a lot about restructurings now, and I wonder, where do you think the biggest investment gains come from? Is it just putting in new management, or is there a particular process by which the biggest returns come from? Obviously, it's a pretty in-depth process, as you explained. But I just wondered if there's a particular thing you've seen in your experience where that's what really maximized the value for the LPs in these restructuring deals.
Yeah, certainly. As you can imagine, the family-owned business, there are different equilibriums levels, sure. The connections and all those things. But you have to manage the company realistically, and put the right people in it, and better control environment established with right targeting. And taking quick steps in the business model. Usually the business model is not right. That's why they need outside investor. And there is certainly that operational efficiency that you can gain right away, in a very short time. And there are a lot of high growth opportunities in operational sectors if you check out, and these can be converted in profits easily. So to increase the value of the equity invested, so you can increase it very fast, and you can reach the much and faster and higher EBITDAs, even though be more than the targeted. And company need to unload the unnecessary carriages, the businesses that's carrying on the shoulders, right concentration is, would be the right word, I believe,
No, I definitely think that's true. Okay. Well, yeah, no, those are great insights. And we've talked a little bit about the risks associated with this, and I wondered if you could just discuss some of the risks associated with a private equity investment like this, or some of the risks you've seen and tried to mitigate against.
Certainly. Of course, the global political and economic risks are always there. The world is small now, and for example, the Fed decisions impact all world right away in a minute or so.
Yeah,
even the stock markets start to play if the decision is expected positive or minus. I mean, when Bernanke talks and Turkey listens, everyone listens.
Everyone. Yeah.
So everybody listens, and so that's one thing, and we should put it aside. And company management and company's operational control should not last at any point of time. That's the most important part. Mm-hmm. And also, if you wanna spend time, you shouldn't miss it. Any point, even the summertime. Yeah. You should check out the company, and operational risk always can occur, and usually cannot be avoided. Maybe you need to have the risk areas definitions. Risk areas defined, and competition environment, I take it sincerely, very seriously, competitive environment, because strong competition environment in some areas, which is good actually for the companies, for the growth. And competition environment must be evaluated in continuous base, and it should be reviewed by BOD even, in regular base. And that's my belief. And agenda of the company should be always intact, among partners and solid. So it cannot be apart. And decision making is very important. And you have to define everything, Mm-hmm. That's, I believe, the risks. And if you lose up to the agenda of company, and if you're not following up, then you have a problem.
Sure. No, I think that's consistent around the world. And,
certainly.
Regardless of the investment. So that's good advice for anyone, really.
Thank you.
As a CFO, is there one particular lesson you can offer, maybe from your past experience, or something that informs this lesson to private equity managers looking to improve portfolio companies or turn around a business? Is there one thing that they should keep in mind, or something that they maybe haven't thought of before?
Not actually, but for the private equity, I would say that I will look at that from the two angles. And first, for the private equity, look at not only numbers, but owners and management's willingness of change under corporate governance. It requires a big change for them. And if companies establishing partnership in need of surviving, and I believe it's no area for me. I mean, it should be for the growth, And
sure.
And executive management is not in line with policy. If they're not, then make the changes right away. Don't wait and too long for anything.
I mean, it's worse. Yeah.
Even find possible candidates before it knows. So no time wasted on search and find issues. And I would say for the CFOs that become placed in those type of companies, new established companies, PE involved companies, recognize and know the way of doing the business change, Yeah. And so the boss is not the one person or one family, and it's different. And value drivers of company should be established, and value drives and value drivers, And it is an opportunity for you to make necessary changes. I mean, as a CFO, you always say, okay, if we did this, we could do this. Then this time you can get this help, and you can make the company better in every sense. Growth, profitability, and it's awesome opportunity for CFO to develop himself and establish a good network.
Mm-hmm. Yeah, no, I think that's great lessons, and just keep in mind. That's terrific. Okay. So this is really my last, formal question I have is, how do you think the CFO role has evolved in private equity? Are there any big changes in the way private equity firms view the CFO role or the financial management department? I know that a lot of private equity firms are increasingly trying to institutionalize the CFO role within the actual buyout firm, managing the various funds and assets under management. And, seeing it more as a company in its own right, rather than any different vehicle than what another company. So I think there's been a sort of a maturation of the private equity industry. I was wondering if you saw that specifically in the CFO role.
Yeah, I certainly did, and mainly of course, I can talk about mainly for Turkish companies, and but CFO, as we said, need to realize that he is the CFO of a new company. Just we say it, and it's a partnership-led company, and equal distance or the whatever you say, closeness to the both parties. And True bosses now companies' targets, risks, and in emerging markets, PEs should not leave CFO alone or see as only reporting machine. Make him important part of decision making. I think PE should do that, and can see him as a CEO candidate in future. So that's another opportunity for the CFO, and and make sure reporting managers to CFO should be well equipped too. I mean, I would make sure that, and understanding the targets too, they should. And in PE context, it's infinite life and a lot of targets to be reached in such a short period. It needs to be understand that one. And a lot of things still need to be done, and strong strategic contributions expected from CFO, not only regular daily operations. I mean, you have to be strategically approaching the issues. And time comes, CFO has to be fixer among even partners, right? And P should see him as a business partner on that journey, I believe.
Yeah, no, I think that's definitely the case, and I think it's giving them the proper respect and the understanding what all that a CFO can bring to the table, and they should be involved in every facet of running the company. I think that's definitely true, and becoming more so. That's the case today. So that's great.
Thank you.
Okay. Well, is there anything else you'd like to add? Those are all my questions I have.
Thank you for the all questions. It's nice. Yeah. And last, as a final remark, I would say for USP funds, I mean investment funds, hedge funds who seek nice investments are very welcomed in Turkey. I believe it's a good market,
sure.
Growth area, and having large network in business environment in Turkey, I can help them personally myself and colleagues in my team. I have good experienced friends in different areas, supply chain included, and who are real experts in their fields, and they can enter into the Turkish market in various forms, like maybe fund establishment, raise a fund, find suitable investment opportunities for those in Turkish companies, and we are flexible and open to any kind of partnership, and they can reach me from www.metinfinance.com. And also, I would like to add one more thing. I believe we haven't mentioned that also Turkish companies are investing outside of the country. And lately, one confectionery company, one of the leading Turkish confectionery company, bought a company in Italy to expand. Yes, so that's another issue they can look after. Certainly, we are. Yeah, that's a good one.
One more reason to keep our eye on Turkey. It seems like there's a lot of reasons you've given us today to consider Turkey and to see it as the major financial player that it is and has been, and it is becoming more so. So I think that's a great summary you've provided today. Okay, I'll just wrap it up with your bio again, just for anybody listening. That today we have with us Metin Piskinoglu, managing partner of MP Financial Consulting. Metin is based in Turkey and has worked with private equity firms and investment houses through his boutique consulting firm, and in his previous experiences as CFO on the execution side of the M&A business. In addition to his work consulting with mid to large-sized companies, he has found time to blog for a Turkish Harvard Business Review on the web, and I just want to thank you so much for your time today, Metin.
Thank you.
And for staying up at this late hour. I appreciate it.
No problem. Thank you.
Thank you for listening to PrivateEquity.com radio. If you would like more interviews, visit PrivateEquity.com. At PrivateEquity.com, we offer private equity data, webinars, training programs, networking events, and other valuable resources for private equity professionals.